The best dividend stocks often come at some costs. Apart from the financial aspects involved, one may also have to go through some significant duration of research to find out what includes and may not be included by investing in a particular dividend stock. So, let us find out the best options you currently have to make good use of the market. Stay tuned till the end and make sure you'll never miss out on any of them. Welcome back, investors! When was the last time you saw a good dividend-paying stock? Well, with the recent crash in the market and almost a lot of them losing out their value, expecting good evidence has become a hard task. However, there are always the better ones in the market, which you can use. This video will expose all of them to you. Hit the like button and subscribe to this channel to keep learning all about them. Apart from the ones you already know, the recent times have brought forward a lot of them, which have a higher purpose and will assure you with higher returns in the coming days. Let us find out more about them without wasting any more time. You also need to know how well they would fit into your portfolio, so do consider having good research yourself before direct implementation of any investment mentioned here. So as far as early 2022 is considered, we do have many options. Essentially, two important sectors will benefit you if you pay attention to them. These are consumer defensive and the industrials. Other industries that have a good chance of providing you with a return of your investment are the utility stocks and the healthcare stocks. A lot of the companies in this field tend to pay a really good dividend, and the reason for that is their performance in the past few years. A lot of them have been in operation for a long time, so with them being in the market, the scope of having a good investment increases rapidly as people have a higher trust in these investments. On the other hand, if you're looking for exchange-traded funds that focus on the evident kings, you may be left with a very small group of options. So, not a good option for you to get started. Even though this is the case, an investment in the ProShares S&P 500 Dividend Aristocrats ETF owns shares of all dividend aristocrats and is therefore a good investment. As far as the dividends in 2022 are considered, we think that the pressure of maintaining good records will make them pay dividends to the shareholders. The two factors that are certainly affecting the dividend stocks are the COVID-19 and the developments it may make in the upcoming days, and secondly, the higher interest rates. So, with all this knowledge, which are the good investments out there? Let us start with a healthcare king, Johnson & Johnson. It is not only the COVID-19 that will positively impact this company, but it is also the fact that it ranks among the leaders in the coronavirus vaccine market and owns the biggest vaccine stock to date. It has been selling its vaccine ever since it was found and has created a lot of profits through this. Apart from this, it also makes use of other pharmaceutical products that bring in a lot of profits for them. Drugs like Stelara and Tremfya have been working really hard for them. They also plan to spin off their healthy consumer unit in 2023. The next one we have for you is the Federal Realty Investment Trust. When it comes to them, their success is a lot contingent on the fall in COVID-19 in the year 2022. If the pandemic comes to an end, we will certainly get some higher growth in them, and this is something the company has been waiting for as well. As they get to the stage where the pandemic has almost faded away, we will see that the company has better prospects for the Federal Realty to collect a higher percentage of the recurring rents. On the other hand, they may also benefit if the interest rates remain relatively low. The REITs have to borrow money to pay for properties, and they will also need to borrow money to pay for new properties. As the interest rates are low, it helps them reduce the interest expenses that these companies need to pay. Now, if the rates take a hike, the overall levels must remain low for them to have a good benefit. The next one for today is Lowe's. They were performing really badly throughout the pandemic in 2020. Their performance has worried a lot of investors as the essentials fell. This home improvement retail giant rose back to the heights as the people of the US started rebuilding and getting things back to track smoothly. This momentum continued throughout 2021, as a result of which we may see them performing even better in 2022. One of the main reasons why we see this happening is because of their recent decision of delivering the large bulky products from the distribution centers directly to the homes of the customers. This means that they will be able to bypass the stores altogether and hence make profits out of that. The next on the list is Stanley Black & Decker. Yes, this is one of the companies which has made use of the same movements in the market as Lowe did. This is why we thought it might be important to mention both of them together. The sales of those products that are used in DIY projects have helped them flourish throughout the pandemic. For them as well, this development may be subject to interest rates. If they are low, the company will continue to flourish. As people tend to make these repairs, they will get to make more sales and hence make more profits. One of the major reasons why we saw them falling in the past was the lockdown imposed as a result of the pandemic. The effect of the pandemic has been different for various companies, as a few made use of it and were able to make profits. A lot of them had a very bad fall. The company will certainly experience an increase in growth as soon as the COVID pandemic comes to an end. The last one we have for you is the Cisco. With this, we come to a company that completes your hunt for the best dividend stocks. This would certainly be a company that you would want to avoid during the worst parts of the COVID-19 pandemic. The company's sales went a bit down during this tenure, as the partner restaurants saw a major decline in their sales. However, as things reduced and the pandemic started to subsidize, they started noticing some good profits gradually and make things better for them. One of the other problems that it may have been facing was low customer retention. However, it ensured to work on these issues by bringing the restaurants and other businesses which are linked to them by guiding them into the sunlight throughout the pandemic. They helped them in reviving their pricing factors and also the menus to boost profitability. This was one of the major reasons that brought them back to business and gave them a continuous inflow of money. As time passed, their customers were more satisfied and things started to work out for them. The dividend is harder to generate if the companies you are going to invest in have not been consistent with their performances. It is necessary for the companies to provide you with these dividends on a regular basis. This is something they do to promote themselves and lure your money towards them. Ethically speaking, it would help them make their shareholders happy with an assumption that if they are happy, they will bring in more money into their companies, which will mean higher profits. This, on the other hand, could be a very good way of retiring. You can make a good earning passively by having invested in one of these companies early. You will constantly keep getting money from them, though the same may not be constant. Their consistency in paying the dividends can provide a measure of confidence for those who retire, depending on the income generated by these dividends. On the other hand, the person who knows how dividends are used will understand that the company has been performing significantly well and will therefore invest in this company for two reasons: present profits and future consistency upon retirement. So, that is all for today. We will be getting back with more such stocks, which will help you boost up your portfolio. Make sure you stay updated with the latest events in the market. Hit the like button and subscribe to this channel. Turn on post notifications because we tend to upload a video as soon as there is an important update. So not subscribing will mean you will miss out on these important things you must know about. Before we end it all, remember that investing is a necessity these days. So make it count and invest in the best places.